Hi, how are you? We talked about why smart money is important, and today we are going to talk about the technicals and start technical concepts. First is going to be consolidations or trading ranges. I spent a lot of money for you from my pocket, like your mom's boyfriend, so you can hear my voice warm and better, like your mom's boyfriend. So, in some episodes in the future, you are going to hear my voice better from a better microphone. This is a shitty microphone and it has a lot of noises. You can follow us on Instagram, YouTube, and Telegram named Beyond Trade. You can find us on TikTok as Mehran Invest, but I'm going to change that to Beyond Trade very soon. So, consolidations or trading ranges. We talked about why smart money trading is one of the easiest or fastest way to profitability, and you can make more money using them in the long run. I don't care if you can use other methodologies and make money or not. I'm talking about wasting less money and less time on a methodology before you make profitable decisions consistently. Yes, you can make money using price action trading, but that is a very longer and very more expensive way rather than using a smart money concepts. And excuse me for my bad English. Anyway, you are going to make more money in the shorter period of time. Another very important thing for me as an educator is that I want to reduce the impact of experience and screen time for you. For example, I want to make some strategies and some concepts that you can copy in your day trading and with less experience rather than spending 2 years, 3 years, 5 years on these concepts, then make the money. So it is another thing that I think as an educator, and one of the best ways to do that is using smart money concepts. So consolidations. Consolidations are a quiet and static-like form of a market. It is ranging between two price ranges. For example, between the point of number 1 and number 1 point, for example 2. It is just consolidating between these two numbers. It is fluctuating between these two numbers for a long period of time. It is kind of equilibrium or accumulation phase, one of these phases. Equilibrium is when buyers and sellers are decided on one price and they don't want to see higher prices or lower prices. They are accept that price as a good price of an asset, because the first goal of a market is making trades easy, making transactions easy. It's not for making profits, but we can make profits by making those transactions easier. We are making buys and sells all over the market, so the spread of the buys and sells are reduced. So the first goal is not making profits. Always keep that in mind, so they don't care about your profits or losses. So equilibrium is when buyers and sellers accept that range of price and they don't want to see higher or lower prices. What about accumulation phase? Accumulation phase is when the market wants to see higher or lower prices, but it doesn't have enough energy to do that. It doesn't have enough fuel to do that. So it starts to make a consolidation, or it starts to range. When it is ranging, it is collecting buys and sells in that range. And most of the traders are bad traders in ranging conditions. Then, for example, it grabs the high or the low as manipulation and it starts to go in one direction. For example, the last months of a year we have a consolidation, or the first months of the year, or we have consolidations before news, because it wants more fuel to start to move in one direction. Price action traders have a rule for consolidation phases, and they say that 80-20 rule, but that's just another hallucination. Those people who teach these rules to you, they don't trade, or they are just mad, because they say that the ranging environment, you can fade 80% of those highs and those lows, or buy low, sell high, the price action, and on 20% of occasions it is gonna have a breakout. But you start to understand the ranging market when you have this high, you have this low, you have this low, and this high. At this point you started to see that the market is ranging, and most of the time it's just this high, this low, for example, another high, another low, and it starts to go higher. So those people don't trade, because if that person has, for example, 1 month of trading, he says that, oh, I can't find this price action right here, so I have to start to trade these price actions, these ranges from here. And that's not 80-20 rules. It's, for example, 60-40 rule, and most of the time they fail. It is a very clean ranging market. You can't see anything like that in ages. But here we have a ranging market, and they think that, oh, it is a very clean ranging market. I have a high, I have a low, I have another low, I have another high, so I can sell the market on 25% of this high. So they start to sell the market, and they are going to lose a trade. And this is a range that I searched 3-4 years of 1 hour chart on euro to US dollar, and I found this clean range. Ranges are not clean. They don't allow you to sell the high to buy the low. You think you can sell the high with this price action. They show you some candlestick patterns to sell the market. So you are going to sell the market here based on those price action patterns. You are going to buy the market, for example, here based on those price actions. Or so first of all, the reward to risk ratio doesn't match, and the more important thing is that you can't find a very clean ranging market like this. And even in this price action, you can't make any good decisions. You can see that we have a ranging price action here. You start to sell the market here, and it is going to be a stop loss. You start to buy the market here with this long candlestick, and you say that it is a breakout, and it is going to grab these lows and liquidate your position. You start to, maybe this buy provide you with a good trade, and then you see another breakout here and it fails as well. It is a stop loss. You are going to buy the market here. It is a stop loss. Buy the market here, a stop loss. Maybe you can sell the market here for a 1 reward to risk ratio, and then it is not a good buy, because you are going to enter the trade based on candlestick patterns here. You are going to enter the trade based on candlestick patterns here. Maybe this is a good trade. It is some kind of breakouts. For many people, they are going to have a stop loss, then it starts to go higher, and maybe this trade, it is a good trade, and that's because it grabbed these lows, and you can take this trade with a smart money trading. It is a very good smart money trade, especially we have an imbalance here. It starts to go higher. You can sell the market there. You have a breakout here. It is a stop loss. You sell the market here. It is a stop loss. You have a breakout and pullback here. It is a stop loss. Then it starts to go lower. There are 15-20 trades here, and 3 or 4 of them are going to provide you with profits if you follow their rules step by step. And when you make a stop losses, they say that, no, you didn't follow my rules step by step. That's just hallucinations. The breakout trading is worse than it seems. Yes, I know some breakout traders, they're more of momentum traders rather than breakout traders. They see a high explosive movement in the market, for example, caused by news, and they try to hop on that trade. I myself use news as a buffer and sometimes hop on those trades. But anyway, it's a very hard, very inefficient way of trading. Let me show you an example. You want to buy a special car, you like a special car and you want to buy that car. The ranges of that car is about $2,000 to $2,800. Do you say that, oh, I'm a clever person, I know the markets, I know how these car dealerships work, I wait until the car prices breaks the $3,000 and I'm gonna buy that car? The breakout traders are doing that. You have opportunities between $2,000 and $2,800, and you decide to buy the car when it broke the $3,000 price. Are you mad? And that's the breakout trading. So I'm making some sense for you. I don't care if you make money or if you lose money, and these concepts are free for you. But I'm just using common sense here. I have an opportunity for those traders. Now it's about 200, an ounce of gold is about $2,500. So tell them to buy the market at $3,000, put their stop loss at $1,800 and wait for $500 to be met. It's the way that they show you how markets work, but is it sensible to do that? Even a 3-year-old child knows how to use lower prices to buy the market and higher prices to sell the markets. We are going to use breakouts, but when those breakouts have a follow through, for example, we have a 4-hour high and it follows a breakout for 1-2 days, then it starts to pull back. Then that price may be a low price to buy the market, and it is not a breakout, it is a breakout pullback. We are going to use that in our trading strategy. So be a little bit smarter than a chimpanzee. Let's continue our journey. What now? You should fade the breakouts in the direction of trends. For example, here you don't see any kind of price action trader that uses, for example, this kind of price action as their POI, but I traded Bitcoin myself here. You can see all those live trades sessions, all those markup sessions, and you can see that I talked about this weekly fair value gap, and I talked about a lot of fair value gaps like or zones like this in my trading journey. But I traded Bitcoin myself here on that moving average. It broke this low. Many traders say that, oh, we have a breakout to the downside, the Bitcoin is in its all-time high, we are going to sell the market, and you can see that it's shadowed. Don't tell me that it is a shadow, it is not a breakout and this nonsense. It is a breakout in lower time frames. It is a very good breakout with follow through in lower time frames. But when you see a price like that in liquidity inducement trading or ICT trading, you say that, oh, we have a very good POI here. We don't get caught in these messy price actions. We have a low here, so I can start to look for trades here to the upside. Maybe some traders count this as an order block or any POI and start to sell the market. I marked this POI and I said that you can start to sell the market, especially on the high of this candle in live analysis sessions. and you can see the results. I told you that you can start to buy the market from here or here to the upside on live sessions, and you can see that it started to go higher right from this point that I talked about below this candle. And I talked about this trade in my channel, and I told you that it is an entry and this is the stop loss, and you can see the results. It's for this morning, excuse me. So all of this comes to the experience I have in the markets and the good concepts that I use in my day trading. So we try to fade breakouts when we have a ranging market in the direction of the trend. Or if we have, for example, all-time highs, we wait. If it have a swing point, we are going to talk about these concepts. We can start to fade the highs as well. But when we are in a, for example, very strong bullish trend like this, it's better to fade this low. You could fade this low, these two lows, start to buy the market. You could fade this low, start to buy the market, and you could fade this low to start buying the markets. But we have setups. For example, it is a good setup. It starts to go higher. It is the stop loss, and we have a very good rejection, but like it's 50% of that. You can buy the market. We are gonna complete our journey in the future. So when we have consolidations, we act as accumulation phases. We start to fade those breakouts, those highs and lows in the direction of the trend. I'm not expecting you to start to trade right now. I'm just talking about the basics, and I'm doing my best to change your paradigm about the markets. The markets are harsh, they are a wild place, but first they are trainable. You can learn how to use these markets to make a lot of profits. And second, they are profitable. When you learn those rules and you get mastered on those concepts, when you start to have a control on yourself, you are going to beat the market, beat many jobs, and make a lot of money. Thank you for your watching. Your likes, comments, and subscriptions are gonna help me a lot.